Right, check one. Lamai, can you all hear me properly?
Yes, sir.
Right, okay. Right. Lamai, so we'll be starting the session. So I welcome you all to the JMC Virtual Learning Mock Exam Series. On behalf of JMC AAT3 lecturer panel, I am Sandeepa Jayasekera, and some of you might have watched the JMC Virtual Learning videos, so you might know me and you might have learned from me, and some of you may be new to the program. So today our objective is to discuss a model paper or a mock exam paper for the AAT3 FAR subject. As you all are well aware, we are coming towards the final exams of AAT3 before the syllabus change. Therefore, for you to be successful in this exam is pivotal, right? It's so important. So you have to get yourself completed with the AAT exams. You have only 2 exams left. One will be this February exam and the other exam will be the July exam. Those are the 2 last exams before the syllabus change. So you have to give your fullest effort to get through from this exam paper. So a couple of weeks back, I conducted a motivational program and where I actually discussed the paper structure of AAT3. Then I guided you on the key areas based on the paper analysis. So I have done a paper analysis for the FAR subject. Then I talked to you about the areas that can be tested, that might be tested in your exam, right? Lamai, I hope it's okay for me to conduct the entire session in English, neda? Do I need to explain things in Sinhala? No need, neda? Onnai neda? Shall I conduct the entire thing in English?
Yeah, sir. Okay. No problem.
Right, thank you. Righto. So we'll straight away move on to the paper, Lamai. Okay. So you all know that for the financial reporting subject, Lamai, you got 3 hours and you got 15 minutes of reading time. This is really important. So my suggestion is, Lamai, you all know that you got 10 questions. In your paper, you got 10 questions and you have to attempt all the 10 questions. These 15 minutes you have to use very carefully. So my suggestion is to, divide them into 5 minutes each, the reading time, right? Take around first 5 minutes to glance through the questions and decide the order of answering. Glance through the paper and decide the order of answering, right? Okay, what are the comfortable areas? What are the difficult areas? What should I do first? What should I do last? Start from the comfortable to the difficult areas. That is the recommended way. Secondly, if there are any areas, sometimes you have just studied and certain, for an example, it may be the ratios. You remember the ratios and you might forget about the ratios, and certain areas are there little tricky, right? So you can jot down certain points. So take the second 5 minutes to take down the small points, the formula, so whatever the things that might uh, forgotten within the time. Last 5 minutes, look at the first few questions you are going to do. First few questions you are going to do and get ready for that question. Get ready. So that means you have to read the question, you have to highlight, you have to underline. So the last 5 minutes you are getting ready for the paper, getting ready to do the paper. First 5 minutes, glance through all the questions, then decide the order. Second 5 minutes, there are some areas that you have to point down. The things that that are there in your mind, you have to point down them in the paper itself, right? Last 5 minutes, look at the first few questions you are going to do and read the question, highlight the areas which are important. Then soon after you get the paper, you can start doing the paper. Okay, right. Lamai, you all know that we have very limited time to discuss the entire the paper, and I may not be able to cover up the entire thing, right? So, if there are any required questions, just drop me a message, right? Uh, I'll send you a message in the chat as well, right? Uh, Therefore, if you have any questions so that I can prioritize, for the time being, I'll be starting the paper from the first question, right? Okay. Lamai, you know that you have the first section, section A. Section A has 5 marks each into 4 questions, and which are more or less into the theory side and a little bit of calculations, but more on the theory side, right? So here they are more focusing on the conceptual framework, regulatory framework. Then they are focusing on the trends in accounting, ethics in accounting, right? And they are focusing on the other side, the non-financial reporting, integrated reporting, sustainability reporting, right? So these are the key areas when it comes to the section A. Okay, right. So we'll start with the first question, Lama. Question number 1. Now, when it comes to section A, Lamai, right? I'm really trying to help you out now. When it comes to section A, they will give you some detailed paragraph, right? And the requirement. So always remember, Lamai, what you need to really do is to read the requirement. Okay. Now the question says briefly explain 4 enhancing qualitative characteristics. Really speaking, this doesn't have any impact to your answer. They are saying some blah 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 conceptual framework includes objectives, concepts, and definitions, recognitions, measurement, major elements, qualitative characteristics, this and that, right? But what you really need to do is to briefly explain the 4 enhancing QCs. That is what you are supposed to do. Okay. So this is only applicable for the section A. For certain questions only, look at the requirement, then actually you can answer the question, right? Just glance through whatever the paragraphs given. No need to go into detail, right? So we'll start. I'll give the brief idea. So when it comes to the enhancing qualitative characteristics, I hope you can remember. I'll give the briefing. Qualitative characteristics is about the quality of the information. There are 2 fundamental and enhancing qualitative characteristics. 2 fundamental is relevance and the faithful representation. There are 4 enhancing: comparability, verifiability, timeliness, and understandability. Right? Understandability. So in this question, what they are asking is for us to briefly explain the enhancing QCs. Right? So if you take the comparability, right? If you take the comparability, okay, right? I'll just put the brief idea, then I'll give you the answer. Verifiability, timeliness, and understandability. First of all, the comparability, what they say is when it comes to a financial information, it should be comparable. It should be comparable. You should be able to compare. You should be able to compare. You might be comparing it with the previous year. You might be comparing it with a competitor. You should be able to compare. By comparing, you should be able to identify what are the similarities, what are the differences. This is what you need to write, right? So the comparability means the financial information shall be comparable with a similar information that can be a prior year or a competitor information, so that we should be able to identify the differences and similarities. That should be your answer. Don't worry, I'll be giving you the answers. Mamata, I'll be giving you the answers, the model answer. What I want you to do is understand, listen, jot down the points. Then once I put the answer, just take a screenshot. Oh, if you want, I can send you the PDF of the answers later on even, right? Whatever the convenient way. Okay. So financial information shall be comparable, should be able to compare with and to identify the similarities and differences. Verifiability is about when it comes to the financial information, to ensure the reliability of the information, what we need to do is a knowledgeable independent observer. Simply speaking, they are talking about the auditors. Okay. So knowledgeable independent observers should be able to reach the consensus, should be able to reach the population or the consensus. So in the financial statement, we just give you a bulk figure. No? For an example, revenue 5 billion. This 5 billion consists of number of invoices. No? So a knowledgeable person, an independent person should be able to reach that invoice level. That is what we call the verifiability. So you have to write that answer. Okay. Timeliness. Financial information shall be provided in time. So information which are delayed, that has very less value. Even though how reliable the information is, you need to have them in time. Clear? Understandability. Understandability means a person with a reasonable knowledge. Person with a reasonable knowledge. Person with a reasonable knowledge, right? Should be able to, knowledge should be able to understand the financial information. Person with a reasonable knowledge should be able to understand the financial information. Clear? ඔන්න ඔය ටික තමයි අපි ලියන්න ඕනේ. We should write this in a small paragraph manner. Okay? Right. Let me give you the model answers, lamai. Right? Please take a screenshot. ඔයාලා මේකේ පොඩි screenshot එකක් ගහගන්න. Question number 1. Comparability, verifiability, timeliness and understandability. If you write these things, you'll be getting the marks. Okay, right? Please remember to go through these QCs. There's a high possibility that it can be tested. Right? Hari. ළමයි. ඒ යන විදිය ඕකේද ඔයගොල්ලන්ට shape ද කොහොමද? Right? So the way that I'm just explaining, then I'm giving you the model answer. Whenever there's a calculation, I'll do. Right? Otherwise, for me writing everything, that doesn't make any sense. Neither. Okay? Good. I mean, you all have to interact with me. Yeah? You have to say, okay, it's good or it's bad or nothing or whatever thing. Just drop me either a message or, you can actually unmute and tell even. Okay? There's only one who is responding. Good? Right. Okay. Good. Everyone, please respond. You have to be active. You have very limited number of days. Right. So we'll move on to the second part of the question. Right. Now this question, yes, you need to read the entire thing. First of all, let me look at the requirement. I'm always starting the question with the requirement. Using the concept of financial and physical capital maintenance. Financial and physical capital, you are supposed to calculate the financial capital maintenance and the physical capital maintenance. Simply, financial capital maintenance is profit. Okay, so they are asking you to calculate the profit. Physical capital maintenance is the difference in your capacity, right? Your capacity. Now, when it comes to a business, lamai, there's a concept called capital maintenance. So whenever we start a business, we start with financial capital. No, we invest our capital, no, our net assets. No, and not only that, we come up with a capacity. For an example, if it is about a factory, we might have a capacity of 10,000 units, and we invested 100 million rupees. Right? Then at the end of 1 year, right? So you need to calculate how much of profit were made by that factory, and because of that particular business, the progress, the financial performance, how much of capacity has either increased or decreased during that year. So that capacity difference is what we call the physical capital maintenance. Your financial improvement, the performance, the profit is what we call the financial capital maintenance. Okay. Now let's see the question. Manatunga is a sole proprietor. At the beginning of the year, the opening net asset value of Manatunga was 500,000. opening capacity 10,000 units. During the additionally, the owner withdrew 50 worth of cash, 150,000 was invested. That's an additional capital. Due to these impacts, the capacity increased by another 2,000 units. Capacity increase due to the additional capital. Due to the additional capital, the capacity increased by 2,000. The closing net assets at the year end is 800,000. Closing capacity 14,000. Okay, these are the information given, right? So what I need to do is now I just need to calculate the financial capital maintenance and the physical capital maintenance. So it's very easy, not a difficult thing. So you are supposed to calculate the financial capital maintenance and the physical capital maintenance. Physical capital maintenance. It's not a difficult thing. You have to just use your profit equation. You will have understood, you will have done this in your AAT1 profit equation, right? I hope you can remember. You know that opening equity, to that we add the profit and you deduct the drawings, you add the additional capital, you arrive at the closing equity. So in order to isolate the profit, what you do? You keep the profit here. From the closing equity, you deduct the opening equity, minus drawing, you add the drawing, minus plus additional capital, minus additional capital. So you just get a profit formula. That is what you are going to use here, right? So from the closing net assets, I'm going to deduct the opening net assets. I'm going to add the drawings minus additional capital. Same thing here. Your closing capacity minus opening capacity. If there are any impact on drawings, your capacity impacts on drawings you are going to add, and you deduct the capacity impact on the additional capital, right? Okay, just now fill in the blanks. Now what we need to do is fill in the blanks. So your opening net assets 500,000, opening capacity 10,000 units. 500,000, 10,000 units. Withdrawals, that is your drawings 50,000. Drawings 50,000. And they are mentioning anything about the impact on capacity due to drawings. 150 additional capital. 150 additional capital that I have to deduct. And due to the additional capital, the capacity increased by 2,000. That capacity increase I have to deduct. Here nothing. I am going to deduct the capacity increase 2,000. Sorry. Then the closing net asset balance is 800,000, capacity 14,000. 800,000, 14,000. So now I should be getting the answer. 800 minus 500 plus 50 minus 150. I'm getting 200,000. 14,000 minus 10,000, 4,000 minus 2,000, 2,000 units. Okay. Right. Now, please look at these capital maintenance concepts that might be tested. Okay, right. මෙතනත් උත්තර දෙක තියෙනවා ස්ක්‍රීන්ෂොට් එක ගහගන්න. Please take a screenshot. Right. Or if you have attempted the paper, just mark your answers. If you have attempted the paper, mark your answers. Right. Okay. Right. Good. Shall we move on? Right. State the underlying assumption in financial reporting. That is really easy, Lamai. Your underlying assumption is going concern. Your underlying assumption is going concern. Underlying assumption is going concern. Right. Meantime, there's a question. Cash flow stages and SLFR is 15 revenue part. That's all. Right. Good. So some have already attempted the paper. So we'll do these things, the cash flow and the revenue adjustment. Very easily we can do. Okay. Right. We are done with the first question, Lamai. Right. First question we have completed. We'll come to the second question. Because of the timing, I'm doing it in a little faster manner. If you want to slow down, just drop me a message. ඔයාට මේක මේක අඩු කරන්න ඕනේ නම් හරි එහෙමනම් මට message එකක් දාන්න. Right? එතකොට I'll explain it again. Right. So once again, they have given a detailed para. We'll forget about that. We'll come to the requirement. Define sustainability reporting. For 3 marks, you are getting. You just have to define the sustainability reporting. Second one, state 2 points included in the organizational overview and external environment component in integrated reporting. Okay, Tamai. Now let me briefly explain here. You all know that many years back people were doing only the financial reporting. That's only one part of the aspects, no? So that is about the profit side or the economy side. We were looking at, we were giving the stakeholder about the profitability, our financial position. So they were getting the information about only that side. So they were taking the decisions considering only the financial side. Then it was imbalanced, no? So the stakeholders need to be given the information about how a business is serving the people at large, the people factor. The society, the people, the employees, the customers, the suppliers. So how a business is treating the people at large, the societal impact of a business. So we need to provide information to the stakeholders about how do we serve our people factor. Then not only that, we need to provide information about the impact to the nature, to our planet, right? So by running our business, what harm we have done to the environment, what are the good things we have done to the environment, what is our carbon footprint, what is the recycling of our business. So then they created a model called the sustainability reporting. That's a report which covers the financial or the economical aspect, ecological or the natural aspect, societal or the people aspect. So we report on this triple bottom line: people, planet, and the profit. Right? So then the stakeholders were getting information about all these 3 aspects, so then they can get a better informed decision. Right? So that is what we call sustainability reporting. Clear? Then after sustainability reporting, we went another step further. So we went on to discuss about the integrated reporting. So integrated reporting about the entire value creation of the business, right? What is the value we created to the human, right? So that the human capital, the value created to the human capital. And from the intellectual capital, what is the value created? The natural capital, the value created, right? And our financial capital, the value created. Like that, there are like 6 capital, and the entire value created by the business, the overall value was reported in the integrated report. There's a separate format. There are a number of components in that format, and we have to report. So that is what is happening in the sustainability and integrated reporting. Right. We'll start with the first part, Lamai. Sustainability reporting, I explained. Let me show you the answer. Sustainability reporting, a report that analyzes the impact on the economy, society, and the environment, like I told you, due to day-to-day activities of an organization. It covers the profit, the people, and the planet. It presents the organization's values, the governance model, how the business is being managed, governance model, and demonstrate the link between its corporate strategy, its business actions, right, and the commitment to a global sustainable economy. Global sustainable economy. Please take a screenshot of the answer sustainability reporting. Definitely you are getting either integrated reporting or sustainable reporting. You are going to get 5 marks question. Okay? Right. Next part of the question, Lamai. Organizational overview and external environment. Lamai, in the integrated report, there are a number of components. So each components have different factors. Then time to time they are asking you to mention at least 2 of these factors. So I took the organizational overview and external environment. There are multiple factors: your ownership structure, market forces, technological changes, your market challenges you are facing. Like that, at least you need to remember 2 factors. Clear? Ownership structure, core activities and markets, market positioning, legal requirements, micro and macro, market forces, technological changes, environmental challenges, right? So can you please send the answers PDF to the group, which I'll be sending at the end of the session, not at the those who are staying, right? Because otherwise, me sending all the answers beforehand, that doesn't make any sense. So please wait until the end of the session, then I'll be sending to those who are really required. Right. Okay. So, and not all the answers I have included. මම මේක ඔක්කොම answers දාලා නැහැ. මම දාලා තියෙන මේ theory questions ටිකට විතරයි. හරි. මෙතනින් factors දෙකක් මේ පොඩ්ඩක් දෙකක් වඩා මතක තියාගන්න පුළුවන්. market forces, macro, micro. At least 2 you have to remember. At least 2. Okay. Right. Okay. So that's about question number 2. Right. We'll move on to question number 3, Lamai. Right. Look at question number 3. State 2 specified business enterprises given under Sri Lanka Accounting and Auditing Standards Act. This question I have created from the regulatory framework. Lamai, you all know that 1995 number 15 Sri Lanka Accounting and Auditing Standards Act says accounting standards, Sri Lanka Accounting Standards is a law, is a must to be applied by the specified business enterprises. What are these specified business enterprises? It includes all the public listed companies, all the banks, all the insurance companies, all the leasing companies, all the finance companies, stock brokers, stock exchange, any company with more than 1,000 employees, any company with more than 500 million revenue, right? So like that, we have a set of criteria. So like I told you, unit trust, fund management companies, companies with turnover in excess of 500 million, company with gross assets exceeding 300 million, like that. You have to just remember at least 2 or 3, right? This can be tested. I'm expecting SBEs to be tested. Okay, please take a screenshot. Right. Okay. Right. Question number, if you want time, just let me know, right? Okay. Question number 3, part B. Explain 3 regulatory requirements pertaining to the preparation and presentation of financial statements of a company as per the Companies Act. Lamai, you all know that number 7 of 2007, we have the Companies Act now. Now, Companies Act has certain sections which are relevant to the financial reporting, right? There are certain sections which are relevant to the financial reporting, right? Now, there are sections which says, section 148 says, right, every company must prepare the financial statements. Every company, it is a must to prepare the financial statements. Okay. And not only that, you have to keep these financial statements for 10 years. You have to keep the financial statement records for how many years? In a business, 10 years. That is coming from the Companies Act. Section 166 says those financial statements shall be prepared within 6 months from the reporting date. So you cannot be taking 4-5 years to prepare the financials. Soon as the year ends, within 6 months, you have to prepare the financial statements. Then section 167 says those prepared financials shall be given to the shareholders 15 days before the AGM. You know that shareholders are having annual general meeting. 15 days prior, you have to send. And they're saying financial statements are prepared, shall be prepared as per the accounting standards. So even the Companies Act is saying, Lamai, you have to prepare the financial position and the profit or loss. Okay. So you need to mention those things. Right. Please look at this answer. Take a screenshot of the answer. No need to go into this much of details, but at least in a simple manner, you need to write. Okay. Better to mention the sections. Easy to remember now. 148, 166, 167. So those who are, those you all know, I have taught this. Right? Okay, Dalamai. Harida, can I move on to the next question? Okay. Good. Right. Okay. Let's move on to the part 4, question number 4. Right. Carving Limited applies SLFRS for SME. I'll look at the requirement, Lamai. Explain the appropriate SLFRS for SME's requirements to help the finance team to resolve the above matters. I'm expecting this time 5 marks question from SLFRS for SME, right? Small and medium enterprises, right? Standards that can be tested. Okay. So let's see. Carving a Private Limited applies SLFRS for SMEs when preparing its financial statements. Its current financial year ended on 31st of March. The finance team has identified the following matters to be resolved before finalizing the financial statements. First one, Carving a Private Limited has successfully completed a project to develop a patent right. The commercial viability of the project is proven. Commercial viability is proven. Company has incurred 2 million. Company has incurred 2 million as the research cost and further 5 million as the development cost. Right. Now, Lamai, if it is LKAS 38, you would say, okay, research charge to PNL, development, since it is commercially viable, you would say recognize that as an intangible asset. That would be the treatment if it is not a small and medium enterprise. But now this is an SME, no? So in the SME, the standard says it can be research, it can be development, you have to charge it to profit or loss. So research cost, the development cost, we don't care, right? In SLFRS for SME, just charge it to profit or loss. You cannot recognize the development cost as an intangible asset, right? So someone is asking, these are from the first lesson. Yeah, the previous ones are from the first lesson. SLFRS for SME is coming from the standards lesson. Right, part B. So the first part is clear, right? So the R&D charged to P&L. Next one. The company obtained 50 million loan. Company obtained 50 million loan to construct a new building. Loan interest for the period is 10 million. The building was under the construction as of the reporting date. Right. Now, if we apply LKAS 23 borrowing cost, This is a building which is under the construction. It takes time. Therefore, it's a qualifying asset. You can capitalize the interest to the building. You could have capitalized the interest to the building because if it is a qualifying asset. But now this is an SME. What does the SME standard says? Borrowing costs cannot be capitalized. You can add that to the asset. It shall be charged to profit or loss. Borrowing cost shall be charged to profit or loss. You cannot recognize that as a capitalized to the asset. Clear the? Okay. Next one. Company has decided to change the depreciation method from reduce imbalance to straight line method. They adjusted the impact retrospectively in the financial statements. Now here the applicable standard is LKS 8 no. මේකත් හොඳට බලා ගන්න LKS 8 එක LKS 8 can be tested. මේකේ තනින් තන LKS 8 එකෙන් උත් ගත්තා. It will be tested, right? ළමයි LKS 8 says when it comes to a change in accounting estimate, you have to adjust it prospectively. You have to adjust it prospectively. What does it says? So if it is an accounting estimate, you use the available reliable information and you measure the value of a asset or a liability, right? Then with the development, when there are new information, then the estimate gets changed. Then you cannot go back and change. You cannot retrospectively adjust. You cannot go back and change. You have to change from the current year and to the future. That is what LKS 8 says. Same thing is applicable to SME. In the SME, they say the same thing. So what does the SME says? Changes in accounting estimates. You cannot go back and change. You have to adjust it prospectively. Clear the? Right. Now then, ඒ ටික අපි ලියන්න ඕනි වෙන්න මෙහෙම. Right? Okay. This is the answer. ඔයාලට කියපු ටික මම මෙතන ඔයාලට ලියලා තියෙනවා. Research and development, borrowing cost, change in depreciation method. Okay. Right. Please take a screenshot. If you don't understand anything, just drop me a message or unmute and ask so that I can help you. Okay, right? Okay. Right. Lamai, so we have just completed section A, 20 marks secured, right? So I'll be stepping myself into section B where you can get 30 marks. 10 marks, there are like 3 questions. So first of all, let me start with the statement of, you have the statement of cash flows, question number 5. Okay, right. Let me look at the requirement. You are supposed to prepare the statement of cash flows of Sign Up PLC for the year ending 31st of March as per case 7 for 10 marks. As per case 7 for 10 marks, right? Let me look at the question from the beginning. Statement of financial position of Zainab PLC as at 31st of March is given to you. You got the PP inventory, this and that are there, right? And let me move on to the additional info. During the year, company paid an interim dividend. They have paid an interim dividend of 1,002 and capitalized retained earnings and capitalized retained earnings. Capitalized retained earnings. Capitalized retained earnings means a bonus issue. They have done a bonus issue. Right? Of rupees 2 million. Further, the company issued 100,000 ordinary shares. 100,000 ordinary shares to the public. Entire consideration was received. Depreciation and the income tax 2,100 and 1,160. During the year, company revalued the land for the first time and it was a surplus. The company disposed a machine at a gain of rupees 400 on 1st of October. This machine was purchased on 1st of April for rupees 3 million, depreciated at 20% on a straight line method. New vehicle was purchased for cash. Interest expense 500. Right, these are the information given. Okay, so let me draft the format Lamai cash flow statement. This is Zainab PLC. Statement of cash flows. For the year ended 31st of March 2024, rupees in thousands. So you start with the operating activities. Start with the profit before tax. Then you do the plus and minus adjustments, keep some space. Then you do the working capital changes. Then you deduct the interest paid and tax paid. If there's any the gratuity paid, you have to deduct. Okay. Then you have the investment activities, investing activities. Then you have the financing activities. Then you have the net cash flow. You have the opening cash and cash equivalents and the closing cash and cash equivalents. Okay. And you should be able to start the question with the workings. Right. Okay. Just let me know if you are ready. Okay. Bye-bye. Right. Okay. Some have said that they are ready. Others, are you all okay? Format done. Good. Okay. Right. Okay. So you all know that we just have to draft the cash flow statement and you are going to start with the additional information. Okay. So for whatever the additional information, we simply what we do is we just open up a T account. That's it. Right. Look at the first additional information. They are talking about the dividend. Or if you are talking about the dividend, so you need to look at, do we have a dividend payable? So we don't have any dividend payable. So we don't need to open up the dividend payable account, but we need to open up the retained earnings account. And in the same adjustment, they are talking about a share issue. So I'm going to open up the share capital account as well. Right. So let me open up the retained earnings account and the stated capital account. Just put the opening and the closing balances, Lamai. Put the opening and the closing balances. Right. So the retained earnings opening balance 2,200, and closing balance 6,500, right? 2,200 and 6,500. Share capital opening balance 20,000 and 28,000. 20,000, 28,000. Okay, right. Just put the opening and the closing balances. Open up the relevant T account, put the opening closing balances. That is how it works, right? Okay. Please try to do this question with me. If you all have already done, just mark your answers. Right. Then what we are trying to do is we are going to pass the double entry. Simple as that. Right. So the first one they say is they have paid a dividend. When you have paid a dividend, what is the double entry? One side cash comes down. So this is your cash account. Cash flow statement is the cash account. Dividend paid, cash comes down. So under the financing activities, dividend paid 1,200, cash comes down. And debited to dividend expense. Dividend expense ultimately gets deducted from the retained earnings, right? So we'll adjust the dividend expense here, 1,200, 1,200. Debited to dividend expense, credited to cash. Simple as that, right? Okay, next one. Company has done a capitalizing the retained earnings. Capitalizing means lamai part of the retained earnings transferred to the share capital. It's what we call the bonus issue, right? You are transferring your reserves to the capital. Right? It's very simple. 2,000 rupees. What is the double entry? So you remove 2,000 from the retained earnings, 2,000, and you transfer that to the capital. So debited to retained earnings as stated capital and credited here retained earnings. Debited to retained earnings, credited to stated capital. Okay. Done. Next one, they are saying they have done a share issue, 100 shares, right? So there's nothing else in the stated capital account. No. So if you look at this balance here, 22. How that it have become 28,000, 22,000 to 28,000? Because they have done a share issue. They have done a share issue. So then the share issue value is 6,000. The difference 6,000. 22 to 28, 6,000. Credited to stated capital, and you are going to recognize that under the finance activities, shares issued, debited to cash, 6,000. Credited to share capital, debited to cash. Credited to share capital, debited to cash, 6,000. Okay. Right. So the first adjustment we have just completed. We look at the second one. Depreciation and the income tax. What are the relevant T accounts that we need to open? Right. For depreciation, we need to open up the PP account, and for the tax, you need to create the tax payable. So let me open up the PPE account and the tax payable. So this is my PP account and the tax payable. Put the opening closing balances, opening balance, closing balance, opening balance, closing balance. PP 30,100, 35,500. 30,100, 35,500. Tax lamai 600 and 500. Opening balance 600, closing balance 500. Right. Someone is asking, can you please explain again the share issue? Lamai, the question says they have done 100,000 share issue. That is the number of shares. They have issued 100,000 shares, but they haven't given us the cash received. How much? So basically, in your share capital account, you had a balance of 20 and we capitalized retained earning 2000. So it came to 22. So how come 22 to 28 it increased? Because of the share issue. That's 6,000. So credited to share capital, debited to cash. That is what we have done. Right? So please put up the PP account and the tax payable account. Done? Right. Okay. Look at the next transaction, Lamai. Depreciation is 2100. What is the double entry? Debited to depreciation expense. So depreciation is been deducted at your PBT. At your PBT, it has been deducted. In order to remove that, I have to add back. So I'm going to add back depreciation. I'm going to add back the depreciation, which is an uncash expense, 2100. Depreciation is an uncash expense. Debited to depreciation, credited to PP account. So I'm going to credit here depreciation 2100. Debited to depreciation expense, credited to accumulated depreciation or the PPE. Right. Next item, tax expense. Tax expense is 1160. What is the double entry? Debited to tax expense. Tax expense ultimately gets deducted from your retained earnings. Debited to tax expense 1160. Credited to tax payable 1160. Debited to tax expense, credited to tax payable. Debited to tax expense, credited to tax payable. Okay. Right. So we have completed the second adjustment as well. Then the adjustment don't try to close the T accounts. We do that as our last thing. Hari. One adjustment then they got hari. We have completed 2 adjustments. We'll come back to the question. During the year, company revalued its land for the first time at a surplus. There was no other revaluation reserve. Lamai, you don't have to open up the revaluation account here. We just pass the double entry. Revaluation reserve mein. So the revaluation reserve from 2000 to 3000. Revaluation reserve has increased from 2000 to 3000 by 1000 rupee. What is the double entry? Debited to land, credited to revaluation reserve. Debited to land, credited to revaluation reserve. Debited to land, credited to revaluation reserve. So I'm going to debit that to the PP 1000. I'm going to debit that to the PP Lamai 1000. PP 1000 as what? Revaluation. Debit the PP 1000 revaluation. It will be credited to revaluation account. No need to open that account. Right? It has no cash impact. Right. Debited to PP, credited to revaluation reserve. Okay. Right. Next one. We have completed 3 adjustments. 4th one. There's a PP disposal. Then I have to open up the disposal gain or loss account. I have to open up the disposal gain or loss account. So let me, is it okay for me to open up the disposal gain or loss here? I hope you all can see. Right. So it will be in the same page, no? Disposal gain or loss. Right? Disposal gain or loss account. Okay. Then they are saying company disposed a machine at a gain of 400 rupees. There's another income. You know that gain is already been added here. Under the other income, it is been added. What is the double entry when you pass the gain to the P&L? So it's a disposal gain. So your P&L should be credited. So credited to profit or loss, debited to disposal gain or loss. Disposal gain or loss is debited as P&L and it is been credited. It is been added. To remove that, I am going to deduct disposal gain because it's a Non-cash, non-relevant item, no. PP related things are not relevant to the operating, no. It is being added, I'm removing. Under the other income, it was added, then I have removed that. It was added here, I removed that and I adjusted the disposal gain to the gain or loss account. Right. Okay. Right. Look at the next item. The machine was purchased for rupees 3,000 on 1st of April 2022. You have disposed on 1st of October 2023 with a depreciation at 20%. So I need to calculate the carrying value. So the cost of this particular asset is 3,000. I need to deduct the accumulated depreciation. How much is that? So this 3,000 into 20%. How many years? 1st of April 2022 to 31st 1st of October, 1 year, 6 months. So then multiplied by 1.5. Multiplied by 1.5. 3,000 into 20% into 1.5 is 900. So the carrying value is 2,100. The disposed asset carrying value 2,100. Sorry. Disposed asset carrying value 2,100. Now, sometimes in your paper, you will get the cost of the PP separately, depreciation separately. Then there will be two T accounts, PP cost and the accumulated depreciation separately. Or they might give the net book value like this. Then you know how to tackle it. Huh? Right. So, 2,100 worth of a PPE has been disposed. Now we are taking the cost and the accumulated depreciation together. No, I have to take the net book value 2,100. So once you dispose the asset, we have to remove that from the PPE. From the PPE, that will get credited 2,100 to the disposal gain or loss account. Disposal gain or loss account will be debited 2,100 PPE. From the PP, we remove 2,100 and recognize in the gain or loss. Okay. Okay. Done. Right. So then we have done the disposal adjustment. Finally, they are saying they have purchased PP for cash. Once we close down the PP account, we'll get the balance. So I'll just keep it. Finally, they are saying interest expense is 500. During the year, the interest expense is 500. Check, do we have interest payable? We don't have any interest payable. There's no interest payable. So the entire interest expense has been paid. Entire interest expense has been paid. Then how to tackle it? How to adjust it? First, what we need to understand is in your PBT, we have already deducted the interest expense now. And we have a separate place to record the interest paid. So here already deducted. So I have to remove this. Already deducted item I have to remove. So I'm going to add back the interest expense. I'm going to add back the interest expense. How much is that? 500. In the PBT, it is already been deducted under the finance expenses. So once you add back, it will get netted off. Actual payment I am going to deduct here. Actual payment I am going to deduct. Then someone might say, sir, even if we don't put this adjustment, still we get the cash flow properly. Yes, it is. But what you have done is wrong. So you have to add back the expense, you have to deduct the payment. Here, both expense and the payment are the same. That is why we have done this. Okay, so we have done the last adjustment as well. Right. So we've done all the adjustments. Next step is to take the items from the financial position. right? PP lamai already I have done. Inventory. Inventory has increased. Let's take the difference in inventory, right? Let me take the increase in the inventory. 9750 minus 7250, 2500. When inventory is increasing, your cash is coming down, right? Inventory increasing, you are spending cash to buy inventory, right? Inventory increase, your cash is coming down. Debtors have decreased. Debtors have decreased. So you got cash. Debtors have decreased and you got cash. So you have got cash 2250. You got cash 2250. So shall we record those two then? Decrease in inventory under the working capital. Sorry, increase in inventory. Sorry, increase in inventory. Increase in inventory 2500. That's a negative cash impact. Inventory goes up, your cash comes down because you purchase. And then decrease in debtor. That's a positive cash flow. You get cash 2250. Okay, right. Then you have the opening cash 1005, closing cash 2005. There's an OD balance, huh? OD balance of 900 and 1004. So that we have to factor 1005, 900. If you look at your opening cash and cash equivalent, right? 1005 minus 900. Closing cash 25 and 1004. 2500 minus 1400. So OD you have to do that. OD is a cash equivalent, no lamai. Overdraft balance that you have to adjust. Right? Okay. The next item. If you have any concern, just let me know. Right, total assets done, stated capital, we have opened up the T account, revaluation reserve, no cash impact, retained earnings we have opened up. Bank loan. Bank loan lamai has reduced. Bank loan reduced means you have paid bank loan by 4000. Trade payables reduced. That means you have settled the trade payables. Right, 3050. These are negative cash flows. Loan reduced because you settled the loan. Trade payable reduced because you have settled them. 4000 and 3050. So loan paid 4000. Decrease in creditor 3050. 3050. Decrease in creditor 3050. Right. So we have completed that part now. Yeah, all the things we have taken up. Now it's the time for us to close our T accounts. Generally, we'll be starting from the last item. So we'll take the disposal gain or loss. I'm getting a disposal proceed of 2500 cash. I'm getting a disposal proceed under the investment activity, PP disposal, debited to cash 2500, credited to disposal gain or loss. Let's take the tax paid amount 600 1160 minus 500, tax paid 1260. The difference, huh? I'm just closing the T accounts and taking the difference. Tax paid 1250, 1260, sorry, 1260. You can take the PP purchase, close the PP account 2100, 2100, 35,500 minus 30,100 minus 1000, 8,600. PP purchased 8,600. PP purchased 8,600. Stated capital account is balanced. Now you can calculate the profit before tax. 1002 plus 2000 plus 1160 plus 6500 minus 2200. So I'm getting profit before tax 8660. My profit before tax is 8660. Right. Okay, Dilamai. So 8660 plus 2100 minus 400 plus 500, 10,860. After doing the working capital adjustments, 2500 plus 2250 minus 3050, 7560 minus 500 minus 1260. So my cash from operating activities come to a value of 5800. Then 2500 minus 8600, 6100 is the cash used in investment activities, investing activities. Minus 1200 plus 6000 minus 4000. 800 is the cash from finance activities. Right. So you will arrive at a net cash flow 5800 minus 6100 plus 800. Right. You will be arriving at 500 something. 1005 minus 900, 600. 2500 minus 1004. So you will arrive at 1100. Clear? Please check. You will arrive at the answer. හරිද ළමයි cash flow එක okayද? okayද? ඔබ මේ ගාන කලින් හදපු කට්ටිය බැලන්ස් වුණාද? ආවද මේ උත්තර? okayද? cash flow ගාන okay, right, very good. Right. Now, cash flow is one of the easiest questions. You can get the entire 10 marks. අපි අනික් අයත් මත් එක්ක කතා කරන්න මොකක්ද තත්ත්වය? okayද? ළමයි please let me know if you are good, you understand everything. Yeah, right, have you understood? Right, is it okay the way I am explaining? Good. Is it okay for us to move on to the next question? යමුද අපි ඊළඟ ප්‍රශ්නෙට?
Let's go, sir. Yeah.
Right. Okay. Can you explain again about the cash flows? Can you be a little specific? Right, I think I explained the entire thing. If you have a specific item, then I can explain. Otherwise, I won't be able to explain the entire thing again. Right? Okay. Right. So I think we are good with cash flows. We can move on to the next question. If you have any specific area, just let me know. Right. Okay, Lamai. We are coming towards the next question. Question number 6A. Right. We'll look at the requirement. Explain the impact of the above scenarios on the financial statements for the year ended 31st of March of Pramodi Limited as per LKS 37. Lamai, I'm sincerely expecting LKS 37, 38 highly probable standards. Either 37 or 38 will be tested, right? So let's see this question. I have put the question from 37. Pramodi Limited is a construction company. The accountant of Pramodi Limited has found the following incidents occurred during the year ended 31st of March, and these were not considered in financial statement preparation. One of the construction projects completed had a structural damage, right? The customer made a complaint against the company claiming a compensation of rupees 100 million. So they have done a construction project and there has been a structural damage. The lawyers of the company are of the view that company has a higher probability of losing the case. Lawyers are saying there's a higher probability of losing the case, right? Now, the first incident, Lamai, you are a construction company, you have done the construction, now there are cracks and the structure has been damaged. So now the customer has filed a case against you asking for 100 million. And your lawyers who are going to defend you in the court, now the case is going on in the courts, Lamai, your lawyers are saying, look here, we are going to lose, right? There's a higher probability we are going to lose. The case is very clear. The guilt is in our hand, so we are going to lose. Generally, Lamai, if there's a court case against the company, it's a contingent liability. Generally. Why? Contingent liabilities where you have a possible obligation. No? You might win, you might lose. There's a 50-50 chance. You might win, you might lose. You never know. But if there's a court case against a company, and if it is not a possible obligation, if it is a present obligation, if there's a higher probability, if there's a higher possibility of having that liability, then it's not possible, it's a present obligation, you have to make a provision. Clear the? Now some people are even understanding and even teaching. If there's a court case, it's a contingent. No, it's not like that. Just because it's a court case, it's not a contingent liability. You have to look at the probability. Now here, the lawyers, your lawyers are saying you are going to lose the case. Then you have to make a provision. Okay. So the answer for the first part is, as the lawyers are stating that there's a higher possibility of losing, the company needs to make a provision for this 100 million. Terunada, first part, Terunada, I'll give you the answer. Can you all understand the first part? Okay. Right. Clear the first part? Good. Right. Now look at the second part. Regarding the above structural damage, the company believes that the engineering consulting company Mandi Limited is responsible for the said issue. Now, Pramodi is the construction company. They have constructed the building as per the advisor's consultation of the engineering company. Now that building has a structural damage, customer is complaining Pramodi Limited, look here, you are the one who constructed, so now pay us the compensation. Now, the Pramodi company, the construction company is saying, right, the fault is with the engineering company. So they have filed a case against the engineering company, right? Therefore, Pramodi Limited has filed a case claiming a compensation of rupees 100 million from Mimandi Limited. The company lawyers, Pramodi's lawyers are saying they are confident that the company has a higher probability of winning the case. එකම නඩුව දෙපැත්තට යන්නේ. මම මේක නිකන් ඇඳලා පෙන්නන්නම්කෝ. හරිද? මේ තියෙන්නේ this is the building constructed by the construction was done by Pramodi Limited. This is the client. Right? Now client is saying, okay, look here, this building has a structural damage. This is, like now there are cracks and everything. They are asking, look here, we want 100 million. We want 100 million. Lawyers are saying, we don't have a case here, we are going to lose. So then what we said, for this 100 million, you have to make a provision. This building was constructed with the support of an engineering company called Imandi. Now, Pramodi Limited is saying this structural damage was caused by the engineering consultation. So they have filed a case claiming 100 million. නේ හරි දැන් කස්ටමර් කියනවා එයාට 100 මිලියන් දෙන්න කියලා මෙයාලා කියනවා අපේ නේ වරද මෙයාගේ වරද ඒකද එයාගෙන් අපි 100 මිලියන් ගමු. Lawyers are saying, look here, we believe that the Imandi is responsible here, the engineering company, so we have a good case, we can win this case. There's a higher probability that we are going to win this case, right? Then what here Lamai, you can see when you are claiming this particular asset, Lamai, it's a contingent asset. It's a contingent asset. It's a contingent asset, right? Now, how we look at the liabilities versus asset is different because of the prudence concept. When the lawyer said higher probability, we made a provision. But in the contingent asset, Lamai, even though the lawyer says there's a higher possibility, you cannot recognize the asset. You have to wait until the virtually certain level. You have to wait until the judge gives the order. So even though the lawyer says it's highly possible, you cannot recognize, but you can disclose. This highly probable contingent asset you can disclose. Highly probable contingent liability you have to provide. Highly probable contingent liability provide. Highly probable contingent asset you have to disclose. Terunada, right? Why sir there are two different accounting treatments? Because of the prudence concept. Okay, right. I hope you got the idea. Right, I'll give you the answers. This can be tested. Right, the two ways of how we react to a contingent liability versus contingent asset. Right, so I hope you can understand. Right, let's go back. Two scenarios I explained, Lamai. The last one. Pramodi Limited is offering 1 year warranty for the newly constructed apartment project. If there are minor damages, warranty cost would be 20 million. Probability of minor damages is 30%. If there are major damages, the warranty cost would be 100 million. Probability of major damages is 10%. There's a 60% probability of zero damages. Warranty provision has not been provided. Right, so it's a very easy one. You need to calculate the warranty provision using expected value. You need to apply the expected value. So we'll look at the warranty claim and we'll apply the probability and we'll calculate the expected value. Okay. So there are minor claims, major claims, and no claims. Right? So we need the value as well. Probability, and I need the value and the expected value. So the minor damages, the probability is 30%, major damages 10%, no damages 60%. Minor damages, the value is 20, major damages 100 million. If it is zero damages, there's no warranty cost. Then 30% into 20 million into 30%, 6 million. 100 million into 10% is 10 million. So 16 million is the warranty provision. So debited to warranty expense, credited to warranty provision. Okay. Right. So under the expected value, so you need to make the provision for 16 million. Okay. Expected value can be tested. Okay, good. Right. Shall I show you the answers? So this is the compensation claim, the answer, and the compensation receivable. The lawyers are of the view that the company has a higher probability of losing the case, therefore provision has to be made. Even though the lawyers are of the view of company has a higher probability of winning the case, as per case 37, this cannot be recognized. However, disclosure shall be made. Okay, screenshot tag ganda. Kiyala dunna. Right. Look at the next part of the answer. I hope you understood the question. Then the warranty provision. 16 million, you have to make a provision. 16 million, you have to make a provision. Okay. Right. Hari. Lamai itika okay, we good to go. The question from the LKS 37. Okay. Hari lamai. Okay. Right. Okay. Shall we move on to the next question? Right. Okay. Question 6 part B. Question 6 part B. Let's look at the question number 6 part B. Look at the requirement first. Prepare the extract of the statement of financial position. Statement of financial position as at 31st of March in respect of the lessee for the above transaction. Right. We'll see. Chamudini PLC entered into a leasing agreement with Hasali PLC on 1st of April 2023. 1st of April 2023 to acquire a building for a 10-year lease term. Acquire a building or a 10-year lease term. As per the lease agreement, Chamudini PLC paid 2 million as the down payment. 2 million as the down payment. The balance should be paid as an annual lease installment of 1,301,963 on 31st of March each year. Implicit interest rate is 10%. Implicit interest rate is 10%. The ownership of the building does not transfer. Ownership does not transfer at the end of the lease period. Useful life of the building is 25 years. Assume that the lease rentals was paid on due date. Sir, what is the answer? Right. Okay. So this is the leasing question, Lamai. Right. Now, in this question, Lamai, they have not provided you the present value of the lease. Lamai, you know that when we are trying to calculate the leasing, when we are trying to account for the leasing, you need to have the present value of the lease, present value of the lease installments. In other words, the initial lease liability. If it is not given, you are supposed to calculate. How are you going to calculate? All these lease installments you are going to pay in the 10 years. These lease installments include the interest and the capital repayment part, no? each and every lease installment has the interest and the capital repayment, and it's a future cash flow. If you can discount those 10-year lease installments and remove the interest, you will get the present value of the lease installments. Or in other words, you will get the initial lease value. තේරුණාද? ඔයා ලීස් එකක් ගන්නකොට ළමයි ලීස් ෆැසිලිටි එකක් මුලින්ම අර ගන්නවානේ. දැන් මේකේ ඒක දීලා නැහැ. මට ලීස් ෆැසිලිටි වැලියු එක දීලා නැහැ. ඒතකොට මොකද කරන්නේ? ඔයාගේ ලීස් ඉන්ස්ටෝල්මන්ට් එක තියෙනවනේ අවුරුදු 10ක් තිස්සේ ගෙවන. ඒ ලීස් ඉන්ස්ටෝල්මන්ට් ඇතුලේ තියෙනවානේ ඉන්ට්‍රස්ට් එකයි කැපිටල් එකයි. අපි ඕකේ ඉන්ට්‍රස්ට් ටික අයින් කරලා කැපිටල් ටික එකතුව ගත්තා නම් හරි. So that is something you have to do. So the future lease installments include the interest and the capital. So you will remove the interest and you can calculate the initial lease value. Clear? So that is something that you have to do. Right? Okay. So then what I'm going to do is Lamai. So we have to prepare the financial statement extracts. So we'll start doing the question paper. Right. So they have been asking you to prepare the financial statement extract of statement of financial position. So under the non-current assets Lamai, you have the right of use asset. Then you have the non-current liability. Under the non-current liability, you have the lease liability. Then the current liabilities. Under that even you have the lease liability. Okay, right. So this is what you are going to prepare. And for you to do that, Lamai, yes, you need to do a working. You need to do some workings. So you need to do a working for the right of use asset. Right? And you need to do a working for the lease liability. Let me take the lease liability here, then it will be much easier for me. Right? And you have to do a working for the lease liability. Right. Okay. So these are the answers that you are going to find. These are the answers you are going to find. So you need to do a working for the right of use asset and the lease liability. So before we do anything, Lamai, you need to calculate the present value of lease installments. Present value of lease installments. That is something you have to calculate. Present value of lease installments. Right? That is not given. Generally in the question, they will give you the lease facility. It's not given. Right. So we'll do the calculation. Some people, when they see that there are like 10 years for you to discount, they will give up on the question. අවුරුද්ද 10ක් discount කර කර ඉන්නේ නැහැ මේ ප්‍රශ්නේ අතහැරලා දාමු. No, it's very easy. Right? So if it is 10 years, apply the annuity factor. If it is 10 years, apply the annuity factor. So take one installment. Take the lease installment. That is 1,301,963. And multiply by the annuity factor. Multiply by the annuity factor. You know the annuity factor? 1 minus 1 divided by 1 plus r to the power n. Entire thing divided by r. Okay, 1 minus 1 divided by 1 plus r to the power n. Entire thing divided by r. So it will be 1 minus 1 divided by 1.1. The percentage is 10%. To the power 10 years. To the power 10 years divided by r means 0.1. Sorry. Divided by r means 0.1. Now my 10% is 0.1. 10% means 0.1. Yes, very good. Some have already written. You have to use the annuity factor. Annuity factor. You are learning that in the management accounting. No? So you have to apply the annuity factor and calculate. So let me Calculate the annuity factor. 1 minus 1 divided by 1.1 to the power 10 divided by 0.1. I'm getting 6.144 something, and I'm going to multiply 10301963. I'm getting 8 million. Present value 8 million. What a present value again? 8 million. Okay, right? 8 million, right? Now you know the double entry. This is the initial lease facility. Main initial lease එක. Leasing company ගන්න facility එක. 8 million. What is the double entry? Debited to right of use asset, credited to lease liability. Debited to right of use asset, credited to lease liability. This is your initial lease. Initial lease. Initial lease debited to right of use asset, credited to lease liability. You are taking the lease to get the right of use asset. No, lease is a liability, right? On the other side, you are getting the right of use in the asset. Okay, right? I hope you got the idea. Right. So there is the difficult part of the question. Other things are easy. Then the down payment 2 million, credited to cash, debited to right of use asset. You are paying the down payment to get the right of use asset, credited to cash, debited to right of use asset. Accordingly, you will get the cost of the asset 10 million, cost of the right of use asset 10 million. Then you need to deduct the accumulated depreciation. You need to deduct the accumulated depreciation. This I have already told you. When it comes to the depreciation, we have a rule. We are applying the matching concept. What does the matching concept says? You have to match the return against the cost. So this building you are renting out for 10 years. This building you are renting out for 10 years, which has a useful life of 25 years. You are using only for 10 years. You are getting benefit only for 10 years. You are not getting the ownership of the asset. After renting out the asset for 10 years, you are not getting the ownership. No. So you cannot depreciate the asset over 25 years because you are not getting benefits for 25 years. So you are getting benefits only for 10 years. So we'll depreciate over the 10 years. So the accumulated depreciation is 1 million. Your net book value is 9 million. Your net book value is 9 million. Your net book value is 9 million. Okay. Right. Initial lease, then we'll look at the lease liability side. Initial lease 8 million. We have to add the lease interest. We have to add the lease interest. That is 8 million into 10%, 800,000. Then we need to deduct the lease installment. Now you all know that lease interest, we have to accrue to the liability. When we pay the lease installment, liability comes down. So 1,301,963. So we'll arrive at a closing liability. Yes. Some have already taken the answers and sending me the answers. Minus 1,03963. 7,498,037 is the closing liability. That you have to separate as current and non-current. How to calculate the current portion? How to calculate the current portion, right? For you to calculate the current portion, Lamai, you know the method, current portion. Take the next installment, 1,301,963, and from that deduct the interest in the next installment. Next installment, interest. How do you calculate that? Lamai, whatever your closing liability is going to become the opening liability to the next year, no? On that you charge interest. Interest එක වදින හැම වෙලේම අවුරුද්දේ මුල තියෙන liability එට. So then 7498037 into 10%. So this we have to deduct 749,804. 1301963 minus answer 552,159. Non-current liability. Take the total liability, deduct the current liability. Total liability is 7498037 minus the current portion 552,159. So the current liability is 6,945,878. So we got the answers now. Right of use asset 9 million, non-current liability 6,945,878, current liability 552,159. Good. Hari. Am I okay? The උත්තර තේරුණාද? තේරුණාද අමාරුද? තේරුන්නේ නැත්තම් මට කියන්න. This is kind of a little bit of an extreme question, but it can be tested. You cannot say no. It has been tested even. This type of a question has been tested, can be tested. Right. Okay, are we clear? Good. Right. Now, please let me know if you haven't understood this part. Right. So this is how you tackle a leasing question. I know some of you might be using the T accounts, Lamai. That will take time. This is an easy method, no? Right? So you can use it. Okay. Lamai, okay, the අනික් අයට shade the තේරුණාද? Okay, right. Okay, so we have completed this question. We'll move on to the next part of the discussion. Right, question number 7. Move on to the question number 7. Right. Question number 7, I have put the question from SLFRS 15, Lamai, revenue standard. Right. Prepare the accounting entries relevant for the years ended 31st of March 2023 and 2024 of Bihansa Limited for the recognition of revenue as per SLFRS 15. Right. We'll start from the beginning. Bihansa Private Limited is engaged in providing construction equipment. On 15th of Jan 2023, they entered into an agreement with Sienna Homes to provide construction equipment. Installation and 1-year service. Entire transaction price is 1 million. Entire transaction price. Entire transaction price is 1 million. That includes all three. Entire transaction price in the sense the equipment, installation and the 1 year service. Rupees 500,000 was paid by Ziena Homes on 1st of Jan. Balance was paid on 1st of April, right? So 1st of Jan, when they entered into the transaction, right, they have entered in the agreement and they have made a payment on 1st of Jan, an advance payment. Balance was paid on 1st of April. Okay. The standalone price of the equipment is 1 million. If you take the equipment alone, the price would be 1 million. If you take the equipment alone, if you take only the equipment, it will be 1 million. Installation has a cost of rupees 80,000 and the company expects profit of 25% on cost. They haven't given you the standalone price, but they have given you the cost plus pricing, cost and the profit markup. Standalone price of the 1 year service is 100,000. Standalone price of the 1 year service is 100,000. Equipment was delivered to the customer premises on 25th. Delivered on 25th. Sorry, lamai metana date take a පොට්ටක් වැරදිලා තියෙනවා. It should be 23, yeah. Sorry, my bad. It should be 2023. Sorry for the date. Right, 25th of Jan 2023, and the installation was completed on 1st of October. Installation was completed on 1st of February. Sorry, 1st of February. Company's financial year ends on 31st of March. දැන් මෙහෙමනේ මම මේක explain කරන්නම්. Now there's a company who is providing construction equipment and they do the installation and the 1 year service. If you take all of them together, it's 1 million, but they have separate prices as well. So if you take the equipment alone, it has separate price of 1 million. If you take the installation separately, it has a cost of 80 and they expect 25% profit. If you take the service separately, it has a price of 100,000. So what they say is, there's a discount here. In this transaction, there's a discount. Then they're asking on how to recognize the revenue for both years, 2023 and 2024. Okay, right, let's see how to tackle this question. Okay, lamai, in this question, first of all, you need to separate the discount among the performance obligations. So let me put a small working here. Right, if you look at our performance obligations are the promises, no? Right, we have the performance obligations. Then you need to check whether those are bundled and distinct, bundled or distinct. Then you will get the before discount price. Then the discount, after discount price, and we'll apply the revenue recognition. Okay. I'll use a small table, right, to do this one. Right. So we'll apply the 3 items here. So you have the equipment, installation, and service. These are the 3 items now, right? So the 3 items are the equipment, installation, and the service. Now you need to understand of these 3 promises lamai made by Bihansa, what are the promises that are interdependent? What are the promises that are interconnected? What are the promises that are meant to be together? Now, The customer to be satisfied with the equipment, it needs to be installed. Without the installation, customer is not satisfied. You cannot separate the installation and the equipment. Both are meant together, both are interdependent. Therefore, equipment and the installation are bundled. So this you have to take them together. Service. As and when the installment is done, you don't need a service now. So you don't need service, right? As and when the installation is complete. So the service comes later on. So service is distinct. Service is distinct. I will check the before discount price. Equipment 1 million. That is given. Service 100,000. Only thing is they haven't given the installation neither. They say 80,000 is the cost and they expect a profit of 25% on cost. Then what? 80,000 plus 80,000 into 25%. So it will be again 100,000. So installation is 100,000. So how much is the total? 1.2 million. 1.2 million is the total value without discount. If you take these services separately, it will cost you 1.2 million. But if you were to get them together, then they say the entire transaction price is 1 million. Are we clear? Now, if you take the equipment installation and the service together, the bulk price is 1 million. Separately, if you take, it will cost you 1.2. Okay. Now you can see there's a discount of 200,000. There's a discount of 200,000. Now this discount you have to divide among these three. So how are we going to divide the discount? I'll put the work in here. 1 million out of 1.2. Then how much is for 200,000? Okay. So 1000 divided by 12,000. Sorry. 1000 divided by 1200 into 200. I'll be getting 167,000. So here the discount is 167,000. It comes with some decimals. Take to the closest number. This one here, this 100,000. What is the answer? Right? I'll put it here. 100,000 divided by 1.2 million, that into discount. That is how we allocate the discount based on the relative values. 100 divided by 1002 into 200, you will be getting 16,000 more. Let me put that as 17,000. This one 16,000. I just removed the decimal differences. Now you have what you have done is you have allocated the discount among the three promises. Without discount 1.2, total discount 200. We have to allocate the discount among the three items based on the relative value. 1002 to 1000, then how much for 200? 1002 to 100, how much for 200? Now you can calculate the after discount price. Here it will be 833,000. 100 minus 17, 83,000. 100 minus 16, 84,000. Okay. Right. Then the revenue recognition. Equipment and installation is bundled, no? So these two you can together recognize the revenue. 833 plus 83, 916,000 can be recognized at what point? At once installation is complete, isn't it? Right? Once installation is complete. Once installation is complete. So you have to wait, because if it is a bundled one, lamai, you have to wait once the promise is being delivered. So the installation is getting completed in this question, lamai. Installation was completed on installation got completed on 1st of February 2023. There is a date where you can recognize the revenue of both equipment and the installation, because it's bundled. Then the service income over service period. Service will be started after the installation. Now you cannot give a service before the installation. Then 1st of February 2023 to 1st of February 2024. Okay. But still we are at a working. It's not the answer. No, this is not the answer. This is just a working. Still we haven't done the answer, but have you understood the part? My revenue is a difficult standard. SLFRS 15 is not so easy. That is why every exam they test. If you look at all the recent papers, each and every paper you will find a question from the revenue. Revenue standard they are going to test. හරි. මේක තේරුණාද? මම දැන් මේ මෙච්චරලා කියලා දුන්න ටික තේරුණාද? ඕකේද? Okay. Right. Good. Now we are coming towards the answer. Right. Let me put the answer. Right. So they're asking us to provide the accounting entries. So entries for the year ended 31st of March 2023, and we have to provide the entries for year ended 31st of March 2024. හරි, මේ අවුරුදු දෙකට තමයි දැන් මේ double entries අහන්නේ. හරි. Right. So let me tell you the double entries. Now if you look at the first year, that is 2023, we received 500,000 නේ. මේ ගණදෙනුව පටන් ගන්නකොට මේගොල්ලෝ ඇඩ්වාන්ස් එකක් ගෙවුවනේ ලක්ෂ 5ක. So that is a cash receipt, debited to cash. Debited to cash 500,000. Debited to cash 500,000. On the very first day when you entered into the agreement, they paid 500,000. So that's a cash receipt, debited to cash. Debited to cash. Then you need to identify the revenue to be recognized. කොච්චරක ආදායමක්ද අඳුන ගන්න ඕනේ. 916,000 can be recognized on 1st of February. No? We are looking at the year ended 31st of March 2023. So this 916,000 can be recognized. We can recognize 916,000 in the year 31st of March 2023. Look at this service income 84. Our financial year ends on 31st of March 2023. From 1st of February to 31st of March, there are 2 months, no? Out of the 84,000, 2 months is relevant to financial year 2023. 2 months. 2 divided by 12. Okay? That is relevant for our financial year. 84,000 කියන්නේ අවුරුද්දටමනේ. එතකොට පෙබරවාරි මුල පටන් ගත්තා කියලා කියන්නේ පෙබරවාරි මාර්තු මාස දෙකේ ඉන්කම් එක අපිට ගන්න පුළුවන්. So 84,000 divided by 12 into 2, 14,000. 14,000. This is the equipment and the installation. This is the service fee. So if you take the financial year under our first part, you can recognize 930,000. පාඩ ඇත්තටම sale එක විදියට ගන්න පුළුවන් 930. Right? So you can recognize 930,000 for the first year. So credited to sales 930,000. Then we have to record the difference. සල්ලි ආව 500ක් හැබැයි අපිට revenue එකට 930ක් ගන්න පුළුවන්. We got cash 500 but we can recognize sales 930. Balance is a receivable. Debited to receivable 430,000. Debited to receivable 430,000. That is the first year double entry. Debited to receivable 430,000. Okay. Right. පළවෙනි අවුරුද්දේ සල්ලි ආව 500ක් සල්ලි වැඩි කරා. revenue එකට ගන්න පුළුවන් මොකද equipment එක install කරලා ඉවරුනේ පෙබරවාරි 1 වෙනිදානේ. ඒකන්ද එතනින් කෙලින්ම 916ක් ගන්න පුළුවන්. එදා ඉඳලා පටන් ගන්න service එක මාස දෙකක් මේ අවුරුද්දට යනවානේ. එතනිනුත් මාස දෙකක් එනවා. right? So difference එක receivable එක. We come to the next year. Right? So next year on the very first day they have paid the remaining balance. Remaining balance එක ගෙවලා තියෙනවා පළවෙනි ඊළඟ අවුරුද්දේ පළවෙනිද. එහෙනම් මොකද වෙන්නේ? Debited to cash 500,000. ලක්ෂ 5ක සල්ලි ඇවිල්ලා තියෙනවා ඊළඟ මාසේ ඊළඟ අවුරුද්දේ පළවෙනිදා. How much of income now can you recognize? Credited to sales how much? දැන් මේ 916 ගිහිල්ලා ඉවරයි ළමයි. This 960,000. Give me a second. Right, sorry. Right? So 916,000 already recognized in the previous year. Out of the 84,000, 14,000 was recognized for the previous year. So for the next year, what is relevant? 8 months. Out of 84,000, right? Sorry, 10 months. 10 months out of 12. මාස දෙකක් ගිය අවුරුද්දට ගියානේ. 84,000 into 10 divided by 12, 70,000. 70,000 is relevant for the next financial year in 2024 වලට. So the sale value is 70,000. Sale එකට යන්නේ 70යි. හරිද? cash ආව 500ක් sale එකට යන්නේ 70යි. දැන් ඉතින් ටික මොකද කරන්නේ? ගිය අවුරුද්දේ අර තිබිච්ච receivable එක නේද ඇවිල්ලා තියෙන්නේ. Last year we had a receivable of 430 no. That has been received. Receivable එක අයින් කරමු. Credited to receivable 430,000. Credited to receivable 430,000. Okay? මේක තමයි ඇත්තටම උත්තරේ. හොඳේ. This is where you are going to get marks. For these two double entries, you are going to get marks. Right. I know it's little difficult question, but this type of questions were tested, no lamai. Revenue standard, so we have to be ready, no. හරි. මොකද තත්ත්වය ඕකේද? හරිද ළමයි? තේරුණාද? ඕකේද? Right. හරි. ළමයි තේරුණාද? ඕකේද? So literally speaking, our time is up, but let me do a little bit of questions. තව ප්‍රශ්න කීපයක් මම කරන්න උත්සාහ කරන්නම්. හරි. මේක ඕකේද? තේරුණාද? revenue standard එක මම කට්ටිය දාලා තිබුණ එක පොඩ්ඩක් කරමු කියලා. That is why I put this question. හරි. ඕකේද ළමයි තේරුණාද? Please send me a message to state that whether you have understood or not. Good. Can we proceed? අපිට පුළුවන් ඉස්සරහට යන්න. Good. Right. Okay. So question number 7 part A we have completed. Let's move on to question number 7 part B. Right. Right. So this question I have put from LK 16 PP standard. I have this feeling this time PP standard either a revaluation adjustment or a component depreciation will get tested. මට හිතෙනවා මම හැම වෙලේම මට හිතෙනවා LK 16 will be tested for 5 marks. So keep that in mind. My expectation is either initial measurement or a revaluation or a component depreciation can be tested. Right. So now let's try to tackle this question. So this is, I have put the question from the initial measurement lamai. You are supposed to calculate the cost of the machine, depreciation. If the remaining useful life was revised, LKS 8 chuttadamma for 5 years, then how much is the depreciation? Right? It's not a difficult question. Minol PLC purchased a machine on 1st of April. The purchase cost of the machine is 800,000. Trade discount 10% was offered. VAT 15%. Import duties 5%. Freight charges 50. Clearing and handling charges 30. Site preparation, installation 25 and 20. Staff training 50. Operational cost of initial test run 15. Professional fee on initial test run 9,000. Products of the initial test run was sold for rupees 8,000. Cost of opening ceremony was 40,000. Machine had a residual value 90,000. Useful life 4 years. Lamai, I take this opportunity to teach you a recent change in the LK 16. LK 16 වෙනස් වුණා ළමයි. හරිද? දැන් අපි වීඩියෝ එක කරපු කාලෙට පස්සේ LK 16 එක ළඟදී වෙනස් වුණා. ඒ වෙනස් වුණේ initial test run එක. So recently how to trade the initial test run cost got changed. So that even I will teach now. මම ඒකත් දැන් ඔයාලට අද කියලා දෙනවා. හරිද? Right. So let's see how to tackle this question. You are supposed to calculate the cost of the machine. Right. We'll start calculating the cost of the machine. So you are supposed to calculate the cost. Right. Cost of the machine. There are number of items. Starting with the purchase price, Lamai. Take the purchase price, which is 800,000. You know that from that we have to deduct the trade discounts. Trade discounts, rebates, you have to deduct on this 10%, 80,000. So you will arrive at 720,000. Then Lamai, VAT, value added tax is an indirect tax, no? That is not part of our cost. We don't take VAT, but we have to take the import duty. That's a direct tax. So we will add the import duty. That is on this cost at 5%. 720 into 5%. 36,000. Okay, 36,000. Then freight charge. Freight means transportation cost. So that is something that you have to add, no? Without freight charge, you cannot use it, no? Freight 50,000. Then clearing and handling 30,000. Without clearing and handling, you cannot get the asset. So clearing and handling is a capital cost. Clearing and handling 30. Without the site preparation, you cannot use ne. Site preparation you have to do. Site preparation cost is 25, and without installation you cannot use. Installation is also a must. Installation cost is 20,000. How about staff training? Staff training. Someone can say, okay, staff training is essential. Without training, you can't use. But what is the guarantee that you are going to get that benefit? What if the trained staff leave the organization very next day? Employees are something that you cannot control. So we don't take staff training. Operational cost of initial test run. That is what I wanted to teach. When it comes to an equipment or a machine, sometimes it might require to run a test run. You might wanted to do a test run before we start using the machine. The new amendment, new change to the standard says something like this. When it comes to the initial test run, if there are any operational cost that you cannot capitalize to the asset. Operational cost of a test run charged to profit or loss. If there's a sales income from the initial test run, you cannot add that to the asset. So earlier we used to do that. Can you remember? Test run cost minus the sales income that we added to the asset. No. Now under the recent change, initial test run operational cost, you cannot. Sales income, those are going to the P&L. Only the capital cost of a test run, only the technical cost of a test run, only the professional cost of a test run can be added to the asset. තේරුණාද? ටෙස්ට් රන් එකක් කරපුවාම ඕකට යන ඔපරේෂනල් කොස්ට් එකක් තියෙනවා ළමයි. දැන් මැෂින් එක ටෙස්ට් රන් එකක් කරනකොට මැෂින් එකට දාන මැටීරියල් ටික, එකතු වෙන ලේබර් කොස්ට් එක, ඒවා ඔපරේෂන්. ඉස්සර අපි ඕක ඇඩ් කරා. දැන් බෑ. අලුතෙන් වෙනස් වුණානේ ස්ටෑන්ඩඩ් එක මේ ළඟදී. ආයෙක දැන් කොහෙද යන්නේ? P&L එකට. ඒ ටෙස්ට් රන් එකේ අයිටම් විකුණලා ඉන්කම් එක කොහෙද යන්නේ? P&L එකට. හැබැයි දැන් ඔයා පළවෙනි ටෙස්ට් රන් එක කරනකොට ඉන්ජිනියර්ස්ලා ගෙන්න ගන්නවා, ටෙක්නීෂියන්ස්ලා ගෙන්න ගන්නවා, ප්‍රොෆෙෂනල්ස්ලා ගෙන්න ගන්නවා. ඒගොල්ලෝ හැමදාම ඉන්නේ නෑනේ. They won't come every day. No? So that cost is a capital cost that you can add to the asset. Right? So the initial test run lamai, operational cost no, professional fee, yes. Professional fee on test run, that is yes. Sales income from the test run, no. Opening ceremony, you don't opening ceremony, you don't have to do an opening ceremony for a machine lamai. Right? It's an admin thing. You cannot put that to the asset. That's it. So you can take the cost of the asset. 720 plus 36 plus 50 plus 30 plus 25 plus 20 plus 9, 890,000. 890,000. හරි. දැන් මේක තේරුණාද? ඔය ටෙස්ට් රන් කතන්දරේ ටිකක් අලුත් නිසා තමයි මම මේ ගාන්න දැම්මේ. Since the test run is something new, that is why I put this question. මේක තේරුණාද? ටෙස්ට් රන් එක වීඩියෝ එකේ මම ඉගෙනුවට පස්සේ තමයි මේක චේන්ජ් උනේ. ඒකයි මම දැන් මේ ගාන දාලා ඔයාලට පැහැදිලි කරේ. තේරුණාද? Okay. Right. Then the second part of the question, we are supposed to calculate the depreciation for the year 2023. depreciation for the year 2023. Now we have just calculated the cost 890,000 minus the residual value 90,000. So the depreciable value is 800,000. Then the useful life 4 years. Then accordingly your depreciation 200,000. Your depreciation is 200,000. So that is an easy question. You can easily score the marks. Depreciation is 200,000. Okay. That's very easy part. You know the depreciable value, cost less residual value divided by useful life. Right. Next part. Remaining useful life has been revised for 5 years. Then calculate the depreciation. So then you have been asked to calculate the depreciation for the year 2024. Now you need to apply this concept called remaining depreciable value. Remaining depreciable value you have to calculate. Now we had a depreciable value of 800,000. No? Of that we have depreciated 200,000. No? So the remaining depreciable value is 600,000. Remaining depreciable value shall be divided by remaining useful life, which is 5 years. Right? So always I have told this one. When it comes to depreciation, it's always about the remaining depreciable value divided by remaining useful life. So 600 divided by 5, you will be getting 120,000. 120,000. හරිද? බලන්න උත්තර හරිද කියලා. හරි. Am I okayද? Okay. Okayද?
Okay, sir.
Right, super. So lamai 50% of your paper is been completed, right? Okay, now we have to decide on what we are going to do. Right, lamai. So you got 3 questions left, which marks another 50%. One is the company account, ratio question, and the consolidation. So with the time being, we have to decide on what we are supposed to do now, right? Yeah, please let me know. So I won't be able to do all 3, right? තුනම කරගෙන යන්න ගියොත් එහෙම ළමයි it might take another 1.5 hours to 2 hours. But let me know what you want to do now. ඔයාට අවශ්‍ය කොටස කියන්නේ එතකොට අපි ඒක කරමු. So you got company, you got ratios, you got cash flows. Sorry, console. Message එකක් දාන්න ටක් ගාලා. Okay. So we got one answer. Question number, some asking, please do Costista. I am got the because we have done. company and console ratio. Tenuk ratio. Right. Okay. So what we will do is, right. Question number 9. Some asking me to do the ratios. Some asking me to do the console. Right. So first of all, what I will do is let me do the console question. console එක කරන්න. හරිද? If time permits, let me try to do the ratios. මම company එකේ answer එක ඔයාලට එවන්නම්. හරි? These three questions ළමයි what I have done is I have modified the past papers. මේ ටික පොඩ්ඩක් හරි standard ළමයි. ඔයාලට එන්නේ company account එක ratio console එක ළමයි එකම විදියට තමයි ප්‍රශ්න ටික එන්නේ. So they just test you the similar questions each year. So what I have done is I have taken the past papers, I have modified them. අනික ඒවා නම් මම set කර ප්‍රශ්න තියෙන්නේ, but these questions I have modified. Right? So let's try to do this question number 10 first. If time permits, we'll move on to the ratios. Okay. Right. Look at the console question lamai. You are supposed to prepare the consolidated statement of financial position. Okay. I don't know whether they are going to test on console P&L or the financial position. They much prefer on P&L. වැඩිපුර test කරනවා P&L පැත්ත. But I'm assuming they might test on console financial position. හරිද? But they like to test on P&L. Right. So we'll start from the beginning. Malik PLC acquired 75% of the ordinary share capital of Sonic on 1st of April for rupees 350 million. For rupees 350 million. Financial position is given to you. Investment in Sonic 350, receivable from Sonic 40, stated capital and the retained earnings, payable to Malik 40. These are the important information. Following additional information is also provided. At the date of acquisition, the book value of net assets except the land of Sonic PLC was reflected at fair value. Fair value of the land was lower by 5 million. Right? Like lower by 5 million. Right? Lower by 5 million. Lower. Fair value is lower. At the date of acquisition, the fair value of non-controlling interest. Fair value of non-controlling interest was 100 million. Was 100 million. And the retained earnings of Sonic PLC stood at 75. During the year ended 31st of March, Sonic purchased 9 million worth of goods from Malik. Out of these goods, 50% remained unsold at Sonic. The sales policy of Malik is to keep 20% profit margin. Intercompany balances 40. Impairment test carried out on 31st of March revealed the goodwill is been impaired by 10 million. Right. So these are the adjustments. Let's work on the format. This is Malik Group. Consolidated statement of financial position as at 31st of March 2024. Rupees in thousands. You got the non-current asset, property, plant and equipment. Then there will be goodwill, investment in Sonic in the current assets, inventory, trade receivables, receivable from Sonic, cash, total assets, equity, stated capital, retained earnings, equity attributable to parent shareholders, non-controlling interest, then non-current liabilities, loan, current liabilities, trade payables, payable to Malik, bank OD. Right. So this is the format. Okay. Right. Good. Some have already completed. Very good. Right. Super. Coming, I think I changed a small amount, but your answer is correct. හරි ළමයි format එක හරියද දාගත්තා නම් මට okay කරන්න whether the format is okay with you all. Right, please tell me whether you all are okay with the format. හරිද format එක okay ද ready ද? හරිද ළමයි? Okay ද? Cool. You have to response. Okay. Right. Okay. Right. So let us start with the workings. Okay. Lamai, no need to write the double entries in the exam, but for your convenience only, I'll be giving the double entries. Huh? Right. We'll start doing the question. First one. Lamai, they say Malik PLC acquired 75% by paying 350 million. That is where we start the question. So working number one is investment. How much is the investment? 350,000. 350,000. What is the double entry? Debit and the credit for the investment, Lamai. Right? Now, investment, right now 350 is here under the investment in Sonic. I'm going to remove it from here and I'm going to recognize under the goodwill. I know some of you all have doing this through the cost of control account. End of the day, you are transferring that to the goodwill, no? So debited to goodwill, credited to investment. Debited to goodwill, 350,000. Credited to investment in Sonic, 350,000. Debited to goodwill, credited to investment. Simple as that. investment transferred to goodwill. You know that goodwill is the difference between investor and the net assets. Investment value versus the net assets. The excess value given by the investor. It's a goodwill. That is the first working. It's very easy. So that part we have done. Okay, that is what we are getting from the initial piece of information. We move on to the second part. The additional info given. At the date of acquisition, the book value of net assets except the land was reflected a fair value. Fair value of the land was lower by 5 million than its carrying value. So there's a fair value loss. Working number 2, fair value loss. Fair value loss how much? 5,000. Fair value loss how much? 5,000. Right? 5,000. Now, as a result of the fair value loss, the PP value comes down. So, credited to PPE. When the land value comes down, we have to deduct the PP, Then we have to debit. When the land value comes down, the profit should come down. So, it's a loss, and this loss is happening on the date of acquisition. As of the date of acquisition, there's a loss. Loss means the net assets are coming down. On the date of acquisition, all the net assets are transferred to goodwill. අත්පත් කරගන්නා දවසේ තියෙන සියලුම net asset එක on the date of acquisition, entire net asset are transferred to goodwill. So this fair value loss also transferred to goodwill. අපි ඒක ළමයි goodwill එකට දානවා. PP අඩු කරා ළමයි 5,000, PP deducted 5,000 and we adjust that to the goodwill. දැන් කට්ටිය බලන්න පුළුවන් ඇයි සර් මේ goodwill එකට එකතු කරේ කියලා. නෑ මේ goodwill එක කියන එකේදී ළමයි ඔයා goodwill එක T account එකක් ගැහුවොත් එහෙම මේකේ ළමයි investment එක මේ පැත්තට එනවා. NCI එක debit වෙනවා. Debit වෙනවා කියන්නේ එකතු වෙනවා. net assets එක කියලා කියන්නේ credit ටික අඩු වෙනවා. credit ටික අඩු වෙනවා. දැන් මෙතන net asset එකට debit නේ උනේ. එතකොට මේ loss එක මේ පැත්තට නෙන්නේ. ඒක අන්ද තමයි එකතු කරන්නේ. හරිද? net asset එක අඩු වෙන එකක් වෙන්නේ. Okay? Right. So the fair value loss, we deducted the net asset value, we deducted the PPE and we recognized that impact on our goodwill. Fair value loss. Okay, අනිත් පැත්ත තමයි fair value gain එකක් ආපුවම එන්නේ. Right. Look at the next one. So, at the date of acquisition, the fair value of non-controlling interest was 100 million. Working number 3, NCI at fair value. NCI at fair value is 100,000. So you need to pass the debit and the credit. NCI at fair value 100,000. මම කරන්නේ NCI එක goodwill එකට එකතු වෙනවනේ ළමයි. That is also an investor, no? Small scale shareholder is also an investor. So that I have to add that to the goodwill. මේක goodwill එකට එකතු වෙනවා. අනිත් පැත්තෙන් NCI is a liability ළමයි. ඒක කවදාද pay කරන්න ඕනේ. Since they are shareholders, we treat them under equity, but you have to settle them. One fine day you have to settle. So then we have to credit that to the NCI. Debited to goodwill එකට debit කරා 100,000. Credited to NCI ට එකතු කරගත්තා 100,000. Debited to goodwill, credited to NCI. Debited to goodwill, credited to NCI. If you don't understand anything, just drop a message. Right? You can put that to the chat. Then I can explain. Huh? Investment එක ගැලෙවුවා goodwill එකට, fair value loss එක දැම්මා goodwill එකට, NCI වත් දාගත්තා. Right. Next item. On the date of acquisition, the retained earnings stood at 75. So you need to calculate the So working number 4, I will get net assets of subsidiary. Net assets of subsidiary. So I have to calculate the pre-acquisition, then the post-acquisition, and the reporting date. Okay, I'll have to separate. So I'm going to take the stated capital and the retained earnings. Okay, I'll take the reporting date balance 390,000. 300,000 and 90,000. Stated capital will not change, no. Stated capital will remain as it is. And what they say is on the date of acquisition, the retained earning is 75,000. That means after the acquisition, they have made a profit of 15,000. දැන් මොකද්ද කරේ? අපි ගත්ත ළමයි subsidiary එකේ තියෙන total equity. We took the entire equity of subsidiary. That is 390. And we separated them to what is the equity balance as of the reporting date and what is the equity balance as of the acquisition date and what are the equity balances after acquisition. 390න් මේ parent company එක sub එක acquire කරන වෙලාවේ කීයක් තිබුණේ? 375. acquire කරාට පස්සේ equity එක කොච්චරද වැඩි වුණේ? 15,000. තේරුණාද? Okay. Right. So then we have learned this all the net asset and the date of acquisition. අත්පත් කරගන්න දවසේ තියෙන සියලුම equity එක we have to transfer against the goodwill. We have to transfer that to the goodwill. Then you will be passing the double entry. Debited to stated capital 300,000. Debited to retained earnings 75,000. Credited to goodwill 375. Subsidiary के පොත්වල තියෙන stated capital එක අයින් කරා 300,000. Retained earning අයින් කරා 75,000. ඒ ටික අපි net off කරනවා goodwill එකට 375,000. goodwill එක එහෙම නෙන්නේ. investment එකෙන් net asset එක අඩු වුණාම තමයි goodwill එක. That is what we have done. Okay. Right? So what we have done is lamai, we have transferred the acquisition date retained earnings. We have transferred the acquisition date retained earnings to our goodwill account. That is what we have done. Right. Then after acquisition profit, after acquiring the subsidiary has made a profit of 15,000. That belongs to whom? 75% to the parent, 25% to NCI. So we have to share the profit among parent and NCI. So this 15,000 will be removed from the retained earning. On sub එකේ පොත් වලින් ගැලෙවුවා 15,000. And we have to give that to the parent 75%. To the consolidated retained earning, we have to give 75%. 15,000 into 75% is 11,250. And we have to give the NCI part. Profit එකේ අයිතිකාරයෝ දෙන්නට බෙදන්න එපා ළමයි. profit එකක් අයිති shareholders ලට. 75ක් මේ profit එක අයිති parent, 25ක් අයිති NCI ට. We have to share the profit among parent and the NCI. So we remove that from the subsidiaries books. Sub එකේ පොතෙන් අයින් කරා 15ක්, parent දුන්න 75ක්, NCI ට දුන්න 25ක්. So debited to retained earnings 15,000 and we give the parent share 11,250 and we give the NCI share 3,750. 3,750. Okay. Subsidiary එකේ පොතෙන් 15ක් ගලවලා parent දුන්න 75ක් 75ක් NCI ට දුන්න 25ක්. Okay. So we have completed the adjustment on the acquisition date retained earnings. Right. Next one. During the year 31st of March, Sonic purchased 9 million worth of goods from Malik. 50% remain unsold. Sales policy of Malik is to keep 20% profit margin. Right. So let me calculate the unrealized profit. So let me put a working number 5. URP on inventory. Unrealized profit on inventory. So we'll take the inventory figure. We'll take the inventory value. Out of the 9,000 worth of items, 50% is still remaining. That is 4,500. No. They are keeping a margin. What is margin? Selling price equals cost plus profit. If profit is 20, in this question they are keeping a profit of 20%. Selling price is 100. So the cost is 80. Right? So the margin they are keeping selling price equals cost plus profit. So if the selling price is 100, profit is 20, cost is 80. So now you can calculate the unrealized profit, or in other words URP. You can calculate the URP. How do you calculate the URP? So you take this inventory, which is equivalent to sale value, you divide it by the unit selling price and you multiply it by the unit profit. So 4,500 divided by 100 multiplied by 20. 4,500 divided by 100 multiplied by 20. So you should be getting the answer 900. 900 is the answer. So if you look at this inventory 4,500 lamai, it includes a intercompany profit. Intercompany unrealized profit of 900. Parent company keeping a profit of 900, they have sold that to the subsidiary. So that's unrealized profit. No, nobody is going to pay for that. No, we have to remove that. Always remember, when it comes to an unrealized profit on inventory, you have to remove it from the seller's profit. Seller's profit and the buyer's inventory. Seller is the one who kept the profit. No, so we have to remove that profit from the seller's profit. And buyer is the one who is holding that inventory. No, so you have to remove that from the buyer's inventory. Okay. Unrealized profit shall be removed from the seller's profit and the buyer's inventory. Now who's the seller here? In this transaction, seller is Malik. Malik is the parent. So parent's profit means consolidated retained earnings. You have to remove it from the consolidated retained earnings. Who's the buyer? Buyer is subsidiary, so you have to remove it from the inventory. Debited to consolidated retained earnings 900. Credited to inventory 900. වැරදිලාවත් ඕකේ සෙලර් ළමයි සබ්සිඩියරි වුණා නම් මේ ප්‍රොෆිට් එක 75 25 බෙදන්න ඕනේ. Since the seller is parent, you don't have to share it among NCI. NCI ට ඒකේ අයිතියක් නැහැ. parent ගේ profit එක 100% අයිති parent ගේ shareholders ලට. Parents profit 100% belong to parent shareholders. Right. Okay. So you have done the URP adjustment as well. URP එකත් අපි කරා. හරි. Okay ළමයි. So we have done the URP adjustment. Next one, intercompany balances 40 million. ඒක අයින් කළා දාන්න තියෙන ළමයි. Intercompany balances we have to eliminate. Working number, let me put this working number 6. Intercompany balance 40. Just you have to remove. ඒක නිකන් අයින් කළා දාන්න තියෙන. Debited to payable credited to receivable. එකකින් අයින් කරලා දාන්න තියෙනවා. Payable එකෙන් අයින් කරනවා ළමයි sorry 40,000 here. Sorry 40,000. Amount is 40,000. Remove from the payable 40,000 and remove it from the receivable 40,000. Right. So you come to the last item, working number 7, goodwill impairment. Goodwill impairment. Okay. Lamai, in this question, they are saying goodwill has been impaired by 10 million. Goodwill has been impaired by how much? 10 million. Goodwill has been impaired by 10 million. Okay. So when the goodwill is been impaired, goodwill value comes down. So credited to what? Goodwill. On a goodwill එකෙන් අඩු වෙනවා කීයක්ද? 10,000. Credited to goodwill. Where to debit? When the goodwill is been impaired, yes, goodwill asset comes down. Impairment is a loss, no? Impairment will reduce the profit. Now this goodwill is a full goodwill. Goodwill belong to both parent and the NCI. Why? NCI is measured at fair value. දැන් මේ මතකයිනේ. NCI there are two measurement techniques. NCI at fair value, NCI at share of net assets. If the NCI measured at fair value, goodwill belong to both parent and NCI. If NCI measured at share of net assets, goodwill belong only to parent. So here the NCI measured at fair value. So the goodwill belong to both parent and NCI. Then the impairment loss shall be borne by both parent and NCI. Then what happens? Debited to console retained earnings 7,500. Debited to NCI 2,500. We have to share it among parent and the NCI. Debited to console retained earnings 7,500. Debited to NCI 2,500. Credited to goodwill 10,000. Credited to goodwill 10,000. I know some of you are planning to skip this question. මේ සමහර අය දැම්ම plan කරන් තියෙනවා console එක නම් කරන්නේ. Don't do that ළමයි. It's a very easy area. Console කියලා මහලුක අමාරුවක් නෑ. එකම දේ ඔයා practice කරන්න ඕනේ. You have to be methodical. හැම ගානම එකම විදියට එන්නේ. ඒකේ logic එක තේරුම් ගන්න practice කරන්න. Right. Okay. Right ළමයි. So we have done all the adjustments. මම ඔයාලට screenshot එකක් ගහගන්න එහෙම ලේසියෙන් තමයි එක පිටුවේ කරේ. Now I can do the line by line addition. Now I can do the line by line addition. අදන්නවනේ ඊට පස්සේ කරන්නේ පේලියෙන් පේලි එකතු කරනවා. Starting with PP. PP තියෙනවා ළමයි 540,000 plus 240,000 minus 5,000 නේද? 5000ක් අඩු වුණානේ. 775,000. Goodwill එක බලමු 350 plus 5 plus 100,000 minus 375,000 minus 10,000. 70,000. Investment 350 minus 350 0. Okay. Inventory 117,000 plus 150,000 minus 900. 266,100. Okay. Trade receivables 180,000 plus 90,000, 270,000. Intercompany receivable will be 0. Cash 18,000 plus 90,000, 108,000. 108,000. Okay. Stated capital 700 plus 300 minus 300. Only the parent company share capital will remain. 700 plus 300 minus 300. Retained earnings 225,000 plus 90,000 minus 75,000 minus 15,000 plus 11,250 minus 900 minus 7,500. Then you will be arriving at an answer 227,800. NCI 100,000 plus 3750 minus 2,500, 101,250. Loan balance 125,000 plus 104,000, 229,000. Trade payables 135,000 plus 25,200, 160,200. Payable to Malik will be 0. Bank OD 60,000 plus 10,800, 70,800. 70,800. Can take the total 700,000 plus 227,850, 927,850 plus 101,250, 1,029,100 plus 229,000, 160,200 plus 70,800, 231,000 plus 229,000 plus 1,029,100, 1,489,100, 775,000 plus 70,000, 845,000, 266,100 plus 270,000 plus 108,000, 644,100 plus 845,000. So 1,489,100. So the statement of financial position gets tallied at 1,489,100. Please take a screenshot. Right. Okay, Lamai. Right. Lamai, I took extra 1 hour than the scheduled time, right? So I don't think I won't be able to finish off the ratio question because I think my energy is also been torn apart now. Okay, so what we will do is, Lamai, let me try to share the answers with you all, right? Okay, Lamai, so today, so we have covered altogether like around 60 to 65% of your exam paper we have covered, and I'll be sharing the balance answers. So my whole idea was to give a support Those who have purchased we learning packs, those who haven't purchased we learning packs, just to provide a support, we have organized this mock exam session, and we just started the accounting subject. Rest of the subjects will follow. I want every one of you to join with this mock exam series and get the fullest support. And always remember GMC virtual learning platform, right? So using the V-learning platform, you'll have learned, you'll have gained something, and use that in your upcoming professional exams such as chartered accountancy as well, right? Please be kind enough to send a comment of the today's session. You all can obviously put your comments in the what we call the feedback form, as well as if you can send me a personal feedback, I would be delighted. So with the today's session was meant something for you all, right? So guys, today is 6th of Jan. Within like 25 days, you'll be having your exams. So I hope you all are ready now. Spend the remaining 25 days in a very smart manner. Analyze the papers, identify the key areas, focus on those areas. Always remember, doing the past papers is the key to pass this exam, right? If you do the past papers, at least 5 to 6 papers, right? The most recent papers, definitely you will get through. Now, don't try to uh, watch all the videos at a stretch and try to, do some last minute thing. It won't work. Now, you need to do a focus job. What are the examinable areas? Then watch them, then do the papers. So, that is what you have to do. Okay. So, yeah, someone is asking, please give the recordings. I think this recording will be added to the V-Learning packages or something like that. The V-Learning team will work on that, right? So anyway, thank you for joining, Lamai. And I hope you all had something and you all have learned something. And please remember to share your results after you receive the results as well. So all the best and try to give your best for your examination.